So I'm completely irritated today, and the reason is because my gas light came on. Well, that really triggered it, to be honest with you. So I go to fill up, and I have a car that requires or suggests that you have 93 octane gas in it. So that's what I typically put in it. Today I said, there's no way in hell am I gonna do that. And so I didn't, because it was $5.35 a gallon. Instead, I opted for the mid-grade gas, which was $4.99 and cents. And I filled up my car, and I spent $92 at the pump. 92 bucks, gone. That's just short of $100, gone, like gone. And then I went to the grocery store and dropped another 50 on a bunch of stuff just for dinner tonight. And this is all starting to get really under my skin. See, I think like a lot of people, I'm on a limited income because I sold my company. Maybe I shouldn't have sold my company, but on the other hand, I probably wouldn't enjoy having a bunch of people scream at me because the stock market's going down, because you have no control of that, right? So I'm now, hustling $4. I'm working like everybody else is. I'm enjoying it, and I'm very happy I did what I did. But here's my beef, my issue right now. My issue right now is that the cost of living is going through the roof. Health insurance, gas for my car, food, and a lot of this stuff maybe could have been avoided if our fearless leaders would have stepped up and taken the approach of, you know what, instead of allowing inflation to be an issue, we're gonna squash it right out of the gate. And if they had a year ago stepped up and said, you know what, we're raising interest rates 25 bips every meeting, 25 bips, boom, 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 we would probably be at the target Fed funds rate that they're shooting for now. And chances are the stock market wouldn't have done so well as it did last year, but it also wouldn't be tanking like it is this year. See, when you do things more like on a base hit kind of approach, you don't feel the pain as much. But when you have to do it as, well, I got to get a triple out of this, then you start to feel the pain. And now we have the Federal Reserve, who is right now having to raise interest rates at 50 bips at each meeting. And chances are they'll be forced to pull back because the stock market will tank so bad. And the consumer will be like, I can't believe you idiots are running this country. And Biden will walk himself down there in his way and say, listen, I'm not going to get reelected, and neither are the Democrats, and we, appointed you into that office, so quit raising interest rates. Which means we'll be right back in the same problem we're in today, just a couple years down the road. The problem with all of this is it's political. And when you throw in political and, people getting into office and that kind of thing, you start jacking with the system. The other issue I have is there's a shortage of gas supply. I was reading the other day where diesel gas is starting to get not as much in supply. Well, like you probably say to yourself, well, I don't drive a diesel car. Like, who drives a diesel car? Well, my brother-in-law drives a F-350, and I saw the other day it was $5.49 a gallon. I can't imagine what he pays to fill that thing up. My brother-in-law's business owns a number of diesel trucks because they're in the heavy equipment manufacturing business. And so they have to have diesel trucks. Did you know those trucks that go past you on the freeway are mostly diesel? And oh yeah, I know, I'm gonna hear the words of, well, this is all more reason we should go electric. Well, we have to produce the energy to produce the electricity to charge your car or charge your truck that gets you the food that you're going to get. And to build out that infrastructure is going to take, what, 5-10 years? I mean, that's a lot of time. And yet when Biden got into office, he eliminated this pipeline project that would have been moving gas and oil to the United States. And now we're paying higher gas prices. And there's a shortage of diesel out there. And eventually it's going to get short. You know it is. And we're going to get a shortage of diesel. And that means those trucks that truck all of our food and all those goods to our grocery stores and to our Walmarts and our Targets, and they're going to pass that cost on to you and I, the consumer. And eventually, you're going to get on YouTube and you're going to start ranting about the fact you can't feed your family, the fact you can't put gas in your car, that your business is going underwater because you can't afford to pay your employees because the cost of goods and services are so through the roof that, well, you're going to have to start laying people off. Well, that's interesting because that's one of the biggest indicators of us being in a recession is when we start to lay people off. I heard today where Amazon is going to sublease out or lease out some of their empty warehouse space. Why would they have empty warehouse space? Maybe because the consumer is feeling it and starting to tighten their belt and there's not as many Amazon packages going around. They also put I think it's a 5% surcharge or something on goods because of delivery costs, because of the cost of gas and diesel is so through the roof, it's becoming a negative cash flow to them to deliver it to you. Folks, this is just starting. And if you are not prepared for this, well, get prepared. Especially when it comes to your investing. This whole rotation out of high beta, high risk stocks, the tech stuff, is just getting started. You're starting to see big institutional managers who are now selling out of stuff to cover margin calls, like hedge funds who have goods on margin or on stocks and bonds and derivatives on margin are starting to raise cash. You saw gold go down a couple weeks ago, or it has been going down over the last couple of weeks. And the reason is that's the safe haven, right? That's where you go because of a recession environment. No, it's being sold off because these guys are getting margin calls. Because the leverage they've put on over the last 2 years is now the assets they're in are going down in really interesting fashion. Facebook was down like 7% today because Snapchat 3 weeks ago said they should hit their earnings target and said this is our earnings target, came out today and said, we ain't gonna make it. The consumer isn't spending as much. So they're not spending as much on ads, so we don't have the ad revenue. And they went down 40%, I think. Today, they're like at $12 right now. And I did a video on Best of US about 2 months ago, and I said Snapchat is the one to own over Facebook, but wait till it gets below 20. Well, here you go, it's at 12, but I wouldn't buy it here. It's not a recommendation. I'm looking at it below 10. That's how bad I think this thing is gonna get. So ad revenue is shrinking up. Facebook is gonna take it, Pinterest, and Google, any of these platforms, social media platforms that rely on advertising are going to start seeing a shrinkage in us, business owners, consumers, buying advertising dollars or advertising spaces on these platforms. So which means then at this point, the consumer is tightening, the companies will start tightening, you'll start to see missing earnings. And I suspect second quarter earnings that will be starting to be reported in July will be horrific. And that's when we'll see that capitulation, that blah, blah, get the hell out of Dodge. Just go to cash, please. I've lost so much. I want to lock it in. When you should have been thinking about this back around Christmas time, when you're opening those presents and you spent a boatload of money on putting Christmas presents under the tree, you should have been thinking, when's this going to end? How long can this continue to go? I mean, the consumer lost $4,000 to $6,000 in annual income because they didn't get any checks. You just wait and see. Third quarter, we'll start to see Washington talk about doing more checks, sending out the checks. We're going to help the consumer. We're going to put more money in his pocket, and so we can falsely prop this thing up. You probably are sensing the tone in my voice that I'm a little irritated, and I am, because it's starting to hurt, and I'm starting to hate it. And I'm starting to get sick and tired of watching my debit card stop paying at $75 or $100, just depending on the gas station. I'm tired of looking at my, going out. I haven't been out of the house all day. I've been working on a project in the house, working on some business projects. Haven't gone out. I go out for 30 minutes and I drop $150 in 30 minutes. Gas and 7 items of food. It's ridiculous. I'm fortunate because, well, I have ways to make money. But the average American is locked into a job, minimum, income earning levels. Don't see the potential of something they could do, like write a how-to book or create a how-to video on something they love and love to do, and maybe sell it and make some money, right? Most people don't get it. Most people don't get YouTube or Instagram or these other platforms for which you can possibly down the road with a lot of hard work generate money. No, they're stuck. And if you're driving 45 minutes to work every day, you're spending a boatload on gas, and your check's not going as far. And you're starting to have conversations with your spouse, most likely, around the fact that, we can't do that. Johnny can't play spring soccer this year, and he can't go to camp because, well, we don't have the money. Money's getting tight, so we got to buckle up. And I think this is where we have to, well, number one, take the attitude that we don't deserve anything. I heard this quote. I'm watching this movie series called Yellowstone. My wife and I are addicted to it. And I was telling my daughter, I said, the writers for South Park are also the writers for Yellowstone. And she was like, what? Are you kidding me? I'm like, no, because in every episode of Yellowstone, somebody dies. Just like in every episode of South Park, Kenny always dies. What's the connection there, right? Anyways, Rip says to the new young kid, this is the 4th season, I think 3rd episode or something, he says to the kid, look, get this through your head. You don't deserve anything. You don't deserve anything. And his whole point was, you don't deserve to get a mailbox check like they did. You don't deserve respect. The only way you get it is earn it. And that's what's going to happen over the next 12 months, is that you can sit back and whine about this, and you can sit back and go, oh, woe is me, the government screwed me, give me a check, send me money, oh, woe is me. Or you can pull your big boy pants up or big girl pants up and get to work and start earning. Find different ways to make money. I'm going to write a book. And I'm going to sell it for $10. And it's going to be on bonds. It's going to be on moving averages. It's going to be on what I know, and that is economics and stock markets. And I'm going to sell it for $10. I'm going to start hustling that. How about you? What are you going to do this week? What are you going to take? How are you going to make money as this thing gets really out of whack, when you're at risk working for that boss, and he comes in and says, "Oh, I'm sorry to tell you this, but we gotta lay you off and your division." I was over at a buddy's house. He runs a mortgage department for a regional bank. I was like, "How's it going?" He goes, "Well, other than the fact we just laid off 200 people in our online mortgage division this past week, everything's great." He said, "I'm looking at about a 70%, pay cut over last year." 70%. Now he's in a position he can absorb it. And he said, "I'll be fine." He said, "But the problem is it's what happens in the mortgage industry. Things get really great and everybody and their brother gets in. It's like around here. I live here at the beach. There's like 10,000, 15,000 real estate agents within a 20-mile radius of my house. There isn't a day that I get asked, 'You want to sell your house? You want to sell your house? You want to sell your house?' It's ridiculous." And I think we're at the peak of that. You see housing numbers are slowing. New mortgage applications are slowing week over week. This thing is starting to rear its ugly head. And I think Snapchat's report that they're going to miss earnings and their stock tanking is just a sign. It is the beginning of the end of the COVID adrenaline rush that we've been living on. So, how are you going to make money this next year, over the next 12 months? How are you going to protect your family? How are you going to protect your investment portfolio? Where are you going to go with that money? Where's the opportunities in all this? When shit hits the fan, excuse my language, where do people go when it comes to their investments? Go back and look at the last handful of market meltdowns and go compare sectors. You know that whole quilt chart of all the different sectors, and it goes back 20 some odd years or something. Go look at that. Tell me what sectors do best and will do better in a market meltdown. It's flight to quality, flight to safety, flight to low beta stuff. So you need to get up, you need to start doing your research. Don't sit around and mope and groan and whine about it. Do something about it. Protect your family. That's your job. Protect you, protect your family. Live right, do the right thing, be honest, love one another, because we're going to go through some heavy stuff in the next 12 months, and you best be prepared. I know I am. I know I'm working hard, coming up with different revenue streams, coming up with new different ideas, protecting my family's wealth. It's what you got to do. But most importantly, you got to live loud, brother. Take it easy. Peace.